Hello, everybody. Welcome back for another Cup of Joe. I'm Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. Back from my vacation in sunny San Diego, California, which was absolutely wonderful. But I'm pretty sure that no one around here even noticed I was gone because the market had a fantastic week last week. And the reason for such a great week was that we finally got the news that everyone had been waiting to hear. Headline inflation declined in the month of July. Now, while this decline was only a modest one, it was mostly driven by a drop in oil and gas prices. It was still certainly a welcome development for stock markets. So with this pop in performance last week, let's take a moment to review performance for the year. The first half of this year was bad. We saw the S&P 500 decline about 20%. But history suggests that the second half of the year could likely be good. I read a stat back in July, courtesy of First Trust Portfolios, that explained in the last 90 years, there have been 5 instances when the January through June return was minus 15% or greater on the S&P 500. And in every one of those instances, the return in the second half of the year was positive. So now that we're 6 weeks into the second half of 2022, it certainly seems that the market wants that to be the case. The S&P 500 has powered back 9.2% in the month of July and another 4.3% so far in August. And bonds as well have clawed back some returns since the start of July. The U.S. Aggregate Bond Index, which is the most widely cited bond benchmark, has gained 1.6% since the start of the second half, and even some other bond subsectors such as U.S. corporates and municipals, they rallied almost 3% in that same time. So it's great to see this meaningful recovery in across many different asset classes, but there is still a lot of work to be done, and further recovery all depends on data as it rolls out bit by bit. But for now, we're seeing that gas prices have declined for almost 60 straight days. In fact, the national average price for a gallon of gas has come down almost a full dollar, from $5 down to just a little over $4. The most recent jobs report, surprisingly, showed more hiring than was expected. Consumer spending numbers have remained resilient through the summer. And this has led to some better than expected earnings reports here in Q3 for a lot of consumer dependent companies. Most recent example being Walmart, which just reported this week. So things will remain to be seen when things are fully turned around economically, inflation wise, and obviously with regards to the stock market. But for now, the American consumer and investor sentiment in general are willing things upward. So if you have any questions about this or anything else, please feel free to reach out to us here at Argent Bridge Advisors. Have a great day.